Okay. Hmm. Okay. Okay. I think we're set. Okay. Okay. I think. Okay. So now we are actually live. I want to discuss in this opportunity um a few tools that I like to use. If you've been tuning into the other streams, you probably saw that I like to use the monthly system, sorry, the pivot system, where we define the context for the trades. Main idea here is that you get levels to interact with, and once the levels stop being as relevant, you can start deleting them simply. So I want to review that today. I want to review how to use this ribbon type indicator. This is a moving average, simple moving average. These are two time frames that are the time frames I like to use the scalp to do not really scalp. As you know, it's a controversial term, but to do intraday on BTC, and ideally get either this type of moves or the moves that cover the gaps. As you know, is my look at this. It's my main confluence to look for a gap on the price action, and after the gap has been identified, um, this- once a gap has been identified on the pre-A, if the price is actually trading close to a contextual level, such as this, for instance. If you remember, this level came from a daily pivot. This in particular is an old one from here. It's a continuation type of pivot. It's not an extreme of a range like this, for instance, or this other one. As says in the daily time frame, I have chosen to paint it on the to use a blue color line. Um, and yeah, basically it's that we mark a level, and once price gets close to it, we try to see how it interacts with the price at the moment. So if we take a close look on the daily price action as well, this hasn't changed as much since the last time we talked. I still think it's reasonable to believe Bitcoin can go lower. However, it's sort of making it a bit difficult to handle the intraday, because if this is our daily candles, imagine the chop that there is on lower time frames. However, this is the important part as well. We are having indeed a lot of volatility to do intraday, so I haven't been able to trade as much this week. Been busy some real life things, but now I'm a bit more calm. I don't have to ask many things. So ideally, we want to be monitoring this price action to start making scalps on Bitcoin. So as I was mentioning, we were watching the daily price action here when we had a few relevant levels. So um, this is also interesting about let's say your levels, like why certain levels tend to work, and one why other levels tend to simply not do anything. The main reason is that they are not magical by any means, but it's a help other traders are also using. So at times technical analysis it will not be perfect, and that's why we don't focus a lot on whether if wicks or bodies are the relevant part in, while drawing a trend line, let's say. It's just this morning, Rob Woods, he shared a tweet which was something like, you have to realize the market is just people drawing levels in a certain way, and those levels are not are a way to interpret the complexity of the market. It's a way to cut a lot of noise from the price action and from the picture you're trying to trade. And the edge in that type of analysis of price action in particular, I think, comes from the fact that it's a model. You will have a clear model to trade reality if you have a context. Um, there's this idea of you can maybe open a long every time you see a red car on the street, and as long as you get to do that systematically enough, at least maybe it's a terrible system. Of course, it's completely random and not based on the market. However, there is a chance that you can get achieve reasonable results as long as you manage the risk as well. So I wanted to show you make it on this. Uh, so we'll go about that later. I want to finish this idea of the lines. There's also this idea called random line theory, which is something in an old trading forum. That I remember somebody was talking about that, and I was participating there because it was like from 2006 or something. Um, but there was this theory that no matter where you put a line on a chart, it will randomly at times be a level that is somehow respected by the lower time from price action. And it makes sense. Of course, it makes sense. Some levels might be more relevant to you than to other people, and that's completely fine. The idea is not that everyone uses the same type of levels. Like for instance, moving average tend to do that a lot. Moving average with the specific length, like the 200 length moving average. I think it sort of became that type of tool that is like standard. It's like everyone agrees on above above moving average 200 and it's sort of bullish, and below it's sort of bearish. Um, is that true? Maybe, because if you make a system based on that and you get to play the complexity of the market based on that, then it's true. Same as these levels that I'm using. Maybe to me they make sense. Maybe they don't make sense to you, so you maybe don't want to use this tool in particular. What matters, and this is my whole point, is that the main idea here is that you make decisions based on a set of rules. It's like, I won't trade right here. I will wait to trade near this line that I've drawn in a chart, because I believe price has more interesting trading there and possibly rejecting from there than in the middle of a gap. So I always recommend you that. And in particular, in this case, what I was saying about Bitcoin. Um, there are a few considerations in regard to Bitcoin, and this is about the talk about indicators, because some indicators that I like to use and that I make many trades based on are giving me either mixed signals or signals that the downside movement for Bitcoin might not really happen right now. So where do I go with this? Um, well, let's study first indicator that I use to work with trends. And why is that important? Which is this one, Whole Switch by Insilico. Um, it's probably the only trend following indicator that I like to use, because even if I'm mostly a range trader, I'm a range trader in the sense that I like to use the ranging structure to give me context. So I can say, okay, I will be more interested in shorting here than I will be interested in shorting here, let's say. And that is just, as I was mentioning, it's a model. It's a model we use and I use to reduce a bit the complexity of the market, and try to be more consistent with my bias as well. So um, what I like to use is this indicator house with. Why? Because I think it's a moving average. By the way, it's just a simple moving average, but it has some advantages over the ones that you have to sort of play a lot with the lengths to give you what you need. In this case, I found that it's super responsive. It's actually respond changes the trend from, for instance, here this is a 4 hour price action chart. And something really cool about this is that when the trend starts to change, you can get into the move faster than using other move type of moving average, or even using the cross of moving average, which is something to me is a bit complex to read. I don't really like to have many lines in the chart. And as you have noticed, and if you were on the past streams, I wasn't using an indicator during that first part. Why? Well, basically because indicators are super useful, but as a secondary confluence. I mean, I'm not trying to make blindly a long or a short based on the indicator telling me something about a possible trend or change of trend. But I want to also be able to make that decision in a key level, in an area that to me is relevant. And that for that is these areas that we mark with the pivots. So in this case, I also I also do the same process as with the pivots. I go to a weekly chart and try to create the bias. Uh, like, are we in a weekly trend for the moment? Just by looking at the price action, I could say we are in fact, yes, we are in a clear trend. And if you remember what we discussed last time, the higher time frames give you that idea of where could price be going during the set of lower time frames which is composed of. So, for instance, if we're looking at a weekly time frame, a weekly chart, I would like to also look at the 4 hour, so I can, or maybe the daily. The daily is a bit useless right now because of the chop, but I want to see the 4 hour. So in the 4 hour, I can maybe dissect how the moves happen and what to expect. Um, my idea, the last thing was that this particular formation right here and this candle, I don't know how this is called. I think some I don't know how's the name, but this candle in particular at a reasonable key level such as this piece of price action to me is what is stopping price from simply shooting higher. Unlike here, for instance, that we had a much more inefficient move because it was like more of a void. Same right here. Remember, these moves happen because there's no one on the other side stopping market orders entering. Same right here. I mean, this was a move, an inefficient move, and we give the sign to the market that okay, all these series of prices were not evenly distributed. So the market will tend to distribute that and create fair value and create a range, and it sort of created a range. Um, Range was flipped, and we're right here right now. So my idea was that, but basically I was anticipating a move lower. Just, just for the moment, I really don't think the move lower can happen uh, as fast as I expected because we're having something which is like this eternal chop over here, and it's getting more and more compressed. So at the start, we starting to get more wide moves. Let's just say. Look at this move, for instance, right here. It's quite move, quite wide. It's very volatile. Then we compress, create another move. To me, the range will have to stay here for a bit longer before deciding. So the longer we stay at a level and we basically fail to deliver into the bearish scenario, the more chances of enticing the other side the of the market to come without to play against our idea in this case, which is what was Bitcoin to go lower. um, so that's important. What doesn't happen, I would say this, like what doesn't happen is usually the most important piece of information of a trade. Because it's just that it's you enter a trade which is not yielding the results you want fast enough, and also giving you mixed signals. Okay, you either reduce the size or you accept the loss that you had calculated with the correct risk management and move on and let the trade leave. At times that is difficult when we are playing on such high time frames, uh, like 4 hour and weekly and daily, because there is a lot of time for things and catalysts to develop. Like maybe you have a few days to convince the bulls that this is a good price to beat and to send price even higher. So from that perspective, I think that's something to keep an eye on when you're monitoring a trade. Uh, you usually want to see the results fast, especially when there's mean reversion. Otherwise, there's chances that you enter too soon. And that's why I also bought puts instead of shorting, because by buying puts, the main idea was that the risk the risk was going to be capped at the price, the premium that I was paying, uh, which is okay if they go to zero, and they are practically at zero right now. Yeah, they lost a lot of value, especially the ones on of the 30, well, this weekly expiration right now. Um, these puts are most likely, at least this one, going to expire worthless. What does that mean? This means that um, the risk of losing it all was involved when I bought the puts for the first time, and that's important, super important. Why? Because it's how you manage risk when you buy an option. When you buy an option, you are going um, basically long something uh, that is the same concept, and what you pay for each contract is what they cost. If the contracts go to zero, you lost the money. If the contract goes to a lot of time or a lot of X higher, you win all that X higher, which is the concept behind gamma scalping, which is this the idea behind this trade that I bought an option which had a few days to expiration. I bought it at what I consider was relatively cheap price. But the time for this trade to basically work out, the time for in this case Ethereum go lower to this level in particular, ideally, the time is against me. So they will start losing value as soon as I buy them, and as soon as time passes from the moment they were bought. So in this case, if this trade goes to zero, as I mentioned, I will lose the amount that I put here. I think it was like $50 or something. I put more or less the same amount on this, and that is the price of my stop. The price of the option is the price of your stop. Basically, you manage to risk that way. So I was not really talking about that, but I was reviewing this. Give me a second. I need to write something. Okay. So as I was mentioning, main idea with creating your bias is that you use the higher time frame to create your bias, and then you monitor the trades you make on the lower time. So in this case, what I wanted to do was to show you how do I use the contextual levels and how do I use the indicators. Contextual levels, yes, and indicators. So I like to use a 15-minute chart and a 5-minute chart. The reason is exactly the same. I use a sort of quote unquote high time frame right here and a lower time frame right here. Can I go even lower, like 1-minute chart? Of course you can. And I mean, this is something pretty cool. Like this is a 2-hour trade of Bitcoin essentially rejecting from the key level yet again, which in this case is the top of the range. Um, of course, this is hindsight. But what matters is not that. What matters is that you can start to conceptualize how scalps work in real time. It's like you don't need to have. This is a very tight stock, and if you do that on the liquid altcoin, really you get quite hard. They slip quite hard. On Bitcoin, it's very manageable. It's like if you get stuck by that amount, it's fine. Slippage is not terrible. Um, I trade on Deribit and on the sorry, I trade on Bybit and it's pretty good. I mean, slippage is not the end of the world. Um, so what I was trying to show you is not exactly the 1-minute chart, but how to how to find the setup itself. So in this case, this happened while we were talking. Um, but but once I have this set up and say, okay, this is an important level. I might be interested in longing if we create that acceptance. Remember, this is our bias plan. I might be interested in longing if we get acceptance here. This is the long plan. Or I might be interested in selling as soon as we start breaking this. Why? Because I see on the lower time frame, I have a few interesting components to make a trade. One is this fantastic, beautiful gap right here, which hasn't been covered. Therefore, if we remember, something similar to this would be the long idea. This yet another daily pivot, and it's sort of working. I trust this system of the pivots because I've tested it a lot and it works pretty well in all time frames. So that's why I always talk about that. Anyway, the main idea why we're looking for a short right here, as long as we keep not being able to flip this, will be to sorry, one second. Sorry. I will try to make this a bit faster, so because I need to finish the stream relatively soon. Anyway, what I want to show, we'll do another. Don't worry. I try. This is my way of not having to write a lot. I think it's better if I just talk. Anyway, we had this gap. This was the trigger. We had a context, which is the monthly pivot, and now we're looking for a trigger to get into the trade or not. So we say long trade create acceptance above this level because we identify it as relevant. And then the short will be basically breaking this trend line and entry on on a trade that ideally covers up until here. But if you go lower, and this is an idea that most likely will give some reversion. So see, it already gave here. So if it's retested, it most likely gives some rejection, then probably goes on that stage. It will go lower. So here's when I turn the indicators on, and this is very interesting because we are facing one of the main uses that I have for them, which is to compare the trends. So we know that the market essentially will trend one way or another uh, within a trend as well. So you were seeing this was a huge move upwards, clear uptrend, but then we started to have this sort of a mess. And in a sort of a mess is the complete opposite to a trend. So we can read the trend changes in two ways. For the most part, after huge moves, what we got is like a heavy chop, as I mentioned some minutes ago. However, and this is when you want to use um, either a higher time frame bias to make your mind and not get mad basically because of the chop, or when you want to say, okay, I will now wait for a range or a new trend to develop. So for instance, right here, um, an initial idea would be to short this downtrend that has been created on the 15-minute time frame. If we look um, at the lower time frame, which is the 5 minutes in this case, we start to see a lot of mixed signals, as I mentioned. Why? Because moving averages are terrible for ranges. They simply don't work. It will confuse you more if you pay attention to every micro move in a moving average that can give you a signal within a range. That's why I'm not entirely confident about this trade being a long right here, because we're below the key level. So far, not doing a fantastic job at keeping it. But I do start to consider this as a possibility because I noticed the 15-minute trend is actually starting to change. So if we had one touch, another front run, then this one would have been a terrible shot, for instance, unless we waited for this level to get hit, and then well, here is a reasonable shot. However, for instance, if I'm short right here, I would be very careful or starting to take profit around this area, and if and which is this, the same right here, this this price right here. Why? Because here is where the indicator is showing me that the trend could be retested for the first time, and this is where you can get squeezed pretty hard if you don't pay attention. So, um, we do consider the other probabilities that um, the moving average on the 15 minutes, given the place where it is trading, which is uh, basically a higher time frame resistance and a daily pivot, starts to do more or less the same. It's like I wouldn't be I wouldn't be trying to catch the long right here because I believe we can also chop a lot and create something like that, like Here you could have said, okay, we go to 50K, and no, it was just move a little move within a range at resistance. And here you could have said, no, it's over, it's completely over. No, it was just a small move and actually got invalidated quite hard. You invalidated, then came down. It's like um, my main point with this is that indicators are not magic, but they can help you decide sometimes. For instance, uh, this indicator at this moment is helping me decide that maybe I don't want to blindly short because the trend can be changed and because the downtrend has already been tested a few times. And in the last time, actually, it's going quite hard against it. So, and also I have a lower time frame uptrend which is forming and is somehow yeah, somewhat intact. If it starts to break and does something like a change of trend and price start to chop around, well, and then it crosses this level, for instance, which was the relevant level, the first test of the uptrend, we can be more confident that price is going to go lower. So it's about how you use the tools. It's not about, oh, this tool told me to short and I shorted and I lost money or whatever. Um, Try to make that use of this set of indicators. Okay. I have to go now, but we'll review the other tools that I like to use. This is a basic one. You can use it as well here on the indicators. It's free. This is open source indicator. Try it if you like it. These are the settings. If you want to take a look, or if you want to just, I think these are even the default settings. So don't worry about. Or if you can, you want to test it in a different manner, you can ask me. I tested it. I found this length is actually the best one to scalp. It's quite useful, to be honest. So we reviewed that today, and I will then show you these other tools that I like to use. This well, just the VWAP. VWAP, as you all know, is volume weighted average price, which is somewhat similar to a moving average. It's like a volume moving average. Look at this. This is the this is the daily trend, and it was touched at the level of highest expansion. It was actually never touched before, and it bounced quite hard. So that's why I'm also not considering that I had to be better because price moved a lot and it's time to short. Yeah, of course I have a trade to play that way, but I also have to be careful not to be like overly biased in a direction that my own tools are telling me I might be quite wrong. It's like, no, imagine I never trusted this and say, no, price has to go down, man. What? Come on. Look at this. We're testing at a very hard and almost untouched downtrend on the daily time. No, this has to go down. No, not really, because we also created acceptance about the area of most volume this entire year, and well, basically rip higher on lower volume, I must say, but we're ripping higher. So mm, that on one hand, I will then show you. I also like to use this tool, which is also from Silico. I don't know how to say it, but these are exhaustion levels. Is somewhat useful in the sense that um, I like to use non-time based uh, candles at times, but because they can, for instance, on ExoChart, you can use trend reversal uh, type of candles, which will show you some signs of when the price is actually selling off hard or buying or being bought with a lot of strength because it leaves a bit weak. In this case, as we don't have that on trading beyond the regular candles, I like to use this indicator because it can show me exhaustion levels, and they are, I don't know, are they working? Yeah, they work pretty well. Yeah, I'd say they were pretty okay. I think the first time you get the signal is the most important one, but this doesn't mean that the uptrend or the downtrend will continue. That is super important. It's like this will not, this indicator is not about it's not a trend following indicator such as this. This is only to mark you areas of the chart where it was clearly entered with a lot of strength. So that's the main idea. Again, remember, indicators are not magic. They will just help you um, conceptualize a little bit better some things you might be missing. Like, for instance, to the naked eye, you're not really thinking about the length of these wicks. Uh, you're, I don't. I mean, I don't have that much of a trained eye because I could say this was even more important week, let's say, but the indicator didn't pick it up as an important week. This was a somewhat more important week, and right after that level was the next candle closed, we had a move higher. Not significant, but this is a trade. So where do I go with all this? You can try this tool and you can play with the settings as well. I don't have it open all the time because it's not a tool that I trust as much as the pivots and as this one. So I just have it in my drawer. No, but, I like it. I like it a lot, but it's not my main tool. And then finally, I also use the moon. Yes, this one is yet another indicator from Insilico. All of these are free, absolutely free. You don't have to pay anything for that. What's the idea with the moon? You might ask. It's not about being bearish or bullish. I have this idea, and if you want to listen to it, I'm more than welcome. I have the idea that the moon uh, actually affects people's mentality and psychology, and especially um, that peak euphoria and peak panic can come at areas at times that are close to the important, let's say, moon events in some way. For instance, we had uh, a particularly stressful week for me, at least was last week. We had the vernal equinox, which is basically when the northern hemisphere start to have more light, and when the northern hemisphere also starts getting into spring. Into spring. So is if you notice changes in your mood, for instance, when there is a cold day or when there is full moon or something like that, or even the tides, which are also governed by the moon. My my idea here is that our brains will also do a bunch of stupid shit around very important moon events. So my idea, and I've been sort of testing this lately, is to try to wait for important uh, changes on the moon phases in order to enter swing trades. Because if I get into other type of moons, such as the waning moon and whatever, I use particularly the full moon and the new moon. I think those are the ones that have been uh, giving me more consistent results, let's say. But I was able to catch a really nice short on, I don't remember when was the last time, on Wi-Fi. It was, I think I still have it on the chart. This shirt. So basically, it happened. This huge sell-off happened during the full moon. And yes, of course, the trade made sense in the sense that it was planned and it was executed under certain circumstances that made the trade work. But I also do believe that these moons affect people's mind and sense of risk off or risk on. Uh, so volatility increases. That will be the main takeaway from it. So this again is something I like to put in a chart from time to time. It's actually I've become some sort of a moon expert lately because of all these uses of the indicator. So you can take a look at it as well. If you don't believe in it, it's completely fine. I don't bet exactly because of the moon. I bet because of my TA and my understanding of where price could pivot. That is my whole job as a trader, is to do that. Is there an imbalance that I could participate in? Yes or no? If not, then just stay out. I've been basically not trading this book this entire week because of that. I'm waiting for a clear movement that I think will happen soon. And if I'm wrong, I will wait for another opportunity to play another clear movement. So that's the main idea. So that will be it. Thank you for tuning in. Sorry if there was something that I didn't cover. I will do one of these maybe every day. I honestly think if I have time, I really enjoy them. Feel free to ask me stuff on the chat or whatever in the group. You can also ask me. I think I think you will benefit from that if you get into the conversation, and also it doesn't make it as much as a monologue as I tend to speak. I sometimes tend to speak a lot and do a lot of blabbering, so it will be helpful if you participate as well. We'll cover the rest of the indicators today. We just covered the moving average from Silico whole switch. Fantastic indicator. If you ask me, I do recommend you that if from all of these you pick one, pick this, just so your eyes start to also learn how to identify trends. It doesn't matter that you don't have to use it all the time, but it will be a cool visual aid for you to define better levels. That's my idea and what it did for me. So I think you can do that as well. So, anyways, thank you for being here, and I see you on the next stream.